Hello and welcome. My name is Nikki Wetzel, and I'm the Director of Communications and Advancement here at Prosperity Connection. And I just want to welcome you to our Facebook Live about investing with confidence. We have a wonderful guest here with us today that's going to answer tons of questions. I'm going to let Kristin introduce herself here in just a second. But just a couple quick reminders, actually really just one quick reminder. If you have any questions, please at any point pop them in the chat and I will make sure that we at least address them. If Kristin feels like there's a really specific answer, she'll direct you where to go, but we'll certainly try to answer whatever you come up with. So I think that's all really the housekeeping. Yeah. So I'll let Kristin take a quick second to introduce herself before we pop into the questions.
Yeah, hello, Kristin Thompson Poelker. So I'm a financial advisor with Renaissance Financial, certified financial planner. Been with Renaissance for 13 years, certified financial planner for over 7 now. And why I was very interested in doing this is because I really want to make finances and the education around that attainable to all people. I don't think there should be barriers to entry. I think that everyone should have the opportunity for that economic affordability.
I love that. And that's part of why we're so excited to have Kristin too. We know that getting started with investing is really intimidating. Yeah. And we find that a lot of our clients just want to know where to start. And this is a very highly requested topic. So we are very lucky to have Kristin with us. Very excited about this conversation that's getting ready to start. So right off the top, one of the questions that we get the most is, how do I know if I'm ready to invest beyond retirement accounts? We know retirement accounts are important. Yeah. That could be a whole separate conversation, but how do I know I'm ready beyond that?
Yeah. And I'm going to insert that retirement accounts do relate in the sense of, if you work somewhere where you have a 401k, you probably are investing. So you're less of a novice than you think you are.
Yeah.
But when should I go beyond that and do stuff on my own? I always say it's good to look at your emergency reserves. And what I mean by that is, when you investing, you should think risk. And so you want to know that you have a nice cushion, safety net, the boring stuff. And then think about debt. So it's also hard for me, I'll speak for myself personally, when someone comes to me and they want to invest, but they have high interest debt, it's very hard for me to say that their money should go someplace, because people think high risk, high reward, but high risk, more potential for loss as well. So it's hard to put things in that category or risk level when you have interest that is definitely going to keep accumulating at a high rate.
Like credit card debt,
right? Exactly. Yeah. And you might credit card debt, but you might have personal loan, a high car payment or interest or something. So I look at those things. Do you have a safety net, a cushion? Do you look at your high interest debt? If you're good on both those areas, then when someone comes to me, I'm like, okay, well then let's ready to sophisticate up your plan and do some personal investing.
Sweet. Real quick clarifying question, if you feel comfortable answering, at what percentage would you consider debt high that they may need to prioritize that for? Is it 8%? Is it 10%?
Yeah. To make sure that I'm this is what I look at. So my background, my actually degree was in mathematics.
Oh my lord.
So I like to root a lot of my things in numbers. Okay. And when I was starting to get my CFP, you have to prove everything you recommend, something that you don't really have to do in normal life. Okay. But what that did prepare me for is, if you look at the return of the S&P 500, Standard & Poor's 500, when people say the market, a lot of times they're talking about that.
Okay.
When you look at its return historically in any 30-year period, by being invested for a long time, you could get 10%.
Okay.
So that is my personal benchmark start.
Okay.
So it's my benchmark start. So if you have interest that is in the teens, 13, 14, 20s, that's high interest debt. We really can't compete with that.
Yeah.
If you have interest that's 6, 7, or 8, let's talk about it.
Okay.
Below 4, that is low. And I mention that because that is where mortgage rates were when they refinance. And I still have people come in with a 3% interest rate who they're like, I'm rushed to pay it off. And I'm like, I personally don't know why.
Yeah.
But that is rooted in numbers. That's my threshold. So if you have that car, or again, that card, but that car or other things that are over that 10, the teens, 20s, that's kind of high interest.
Yeah. Yep. All right, awesome. Thank you so much.
Yeah.
Perfect. All right, and then one of the second most common questions that we get is, do I need to have thousands of dollars to get started?
Yeah. The answer is no.
Okay.
and there's so many different ways to do it, like E-Trade,
Oh, okay.
which are a very easy way for you to just open an account and fully buy, shares and all that. Those come with the risk of you're doing things yourself.
Yep.
Yes.
And I did not major in mathematics.
Yes. And so when it comes to working with a financial planner,
Okay.
I would ask them what their minimums are. That's different per company, but it's a range. Some places, like my firm, Renaissance Financial, does not have minimums. So
Nice.
it really does depend. You need to ask that. Do not let that stir you away. An analogy I relate to this is, the people who want to lose weight and they're like, oh, but I'm too overweight to go to the gym. Because they just don't want to be stigmatized, and it's like, okay, but you need to go to the gym to lose weight. It's kind of like that, where we're a good place is in the business to help you get there. So do you need thousands? Not necessarily, based on everything I named, but then also like just
Just ask some
so
questions.
do some research. All that research is usually out there.
Yeah.
Yeah.
Do you have any places that you would really recommend for research, like a place that has a lot of good starter information that people could go to?
No. When I say no, I feel like that sounds so like unresourceful. But what I really mean by that is, if you're interested in a financial firm, which probably you've heard of by connecting with your friends, going on LinkedIn, social media, what I mean is when you then pick that place, it's probably gonna be on their site.
Okay.
Yeah, you probably
Gotcha.
or probably gonna be on the site, or there's probably someone you can call and
Yeah.
just find that out. That
Okay.
information is very basic. Places should be very transparent with it. I know sometimes you might be nervous, like, oh, I don't want to go this 1-800 route. Like that stuff's pretty
Okay.
clear. Yeah.
Okay.
Yeah.
Awesome. All right. So let's get into one of the most, I guess, common vehicles that people have probably heard of, which is the idea of pre and post tax vehicles, specifically like Roth versus traditional. Can you explain the difference between those two things for us?
Yes, I will try to Finance 101 break that down.
Okay.
And these come up a lot with retirement plans with work as well. So we all have to pay tax at some point. Unfortunately, we have to pay tax.
Yeah.
And so let's do things in the framework of that. And it's a matter of, do I pay tax to get it into my wallet, or have I already paid that tax on the front end? Is one way to think about it.
Okay.
So what people are used to traditionally, and when you hear a traditional IRA, traditional 401k, is that you have paid tax before it got into your wallet. So when it goes into a 401k, when it goes into a traditional IRA, it is going in there pre-tax.
Okay.
Because of that, you get a tax deduction.
Okay.
We're all visual, I think, so
Yeah.
I will use some numbers.
Love it.
If you made $10,000 this year,
Okay.
and you put $5,000 into a traditional 401k,
Okay.
when you go to file your taxes, have you noticed when you get your W-2, you're like, I didn't see that number. There's all the different numbers.
Yes. Gross.
Yeah, exactly. Social Security, all that.
Yes.
Well, it will show that you made 5,000 instead of that 10, because you put away 5,000 pre-tax into that 401k.
Okay.
Roth, just the opposite.
Okay.
Even if you did put it into a Roth IRA or traditional Roth, so you can't use it because it's locked up for retirement, you did receive it post-tax.
Okay.
So it will look on your taxes like I made $10,000, even though you're like, well, I don't have that 10,000. You put it into savings.
Okay.
Why does that matter? On the back end is also when you have some tax options. So pre-tax, you never pay tax yet. The IRS says, whoa, before you get to take it, that's when you pay tax.
Gotcha.
You pull the money out, you pay the tax then.
Okay.
Post-tax, they say, thank you for playing. You kept your account, you kept your money in there for the allotted time. For a Roth IRA, it's the later of 5 years or age 59 and a half. You keep it in there, you don't take the money out, you can pull it out post-tax, tax-free.
Cool.
What you see is what you get.
Okay.
I mentioned that because the next question I get is, well, which one is then better?
Yep.
It is not about that. They are the same. They are different buckets defined by their tax situation.
Okay.
The contents, which define how it grows, can be the same.
Okay.
Yeah, so it really is more so what's your tax situation. I have people who are making a lot of money now, so they would rather do the tax deduction to get more deductions because they think, well, I'll be making less in retirement. I have people who are not, they're hopefully going to continue to make more, they're not paying a lot now. I'd rather just pay the small amount of tax now.
Yeah.
And then I don't have to worry about taxes down the road. The tax brackets themselves are historically low. So it's and this is getting into working with an accountant and all those things. Things
Yeah.
I do work jointly with accountants, but it's not that which account is not what makes it better, it's the contents, and you can put the same thing inside of them.
Okay,
Yeah.
awesome. And then is there a minimum for those accounts?
So those accounts as well typically have minimums because of the tax reporting and the extra nuance that goes with them. They don't have to be high. I've seen them as low as maybe $10 or $15.
Nice.
Yeah, they don't have to be high, and your banks will also usually offer Roth or IRAs. So again, I'm not just recommending wildly go out there. You really need to talk to a tax professional or a financial advisor to figure out which one's best for you, to figure out which one you can do. There's different IRS rules.
Yeah.
But those do usually have a minimum. That minimum is available, can be very low. And you just have to think about what the contents that are available. Because even if you do go with a bank might only have bank-like investments available to you.
Okay.
So be mindful of that.
Okay, so then that talks about the cost to open.
Yeah.
All right, so then we've been talking a little bit about the idea of maybe having an advisor who can help, because some of the lower cost options you presented earlier, you do on your own. There's something to be said for having a trusted professional, in my opinion. So what is the cost of a financial advisor to help figure this stuff out?
Yeah. So most advisors are paid either commission, which means they are paid through the investments that you choose. It's per transaction, and then some of them are paid for a fee-based model, assets under management. That's pretty standard or traditional. Why do I mention this? Because you do want to know the difference in what those fees are depending on how much you're going to invest. And I don't mean how much you're going to invest as in the dollar amount.
Okay.
I mean, if you are someone who's like, I just want help, but I don't want to touch it.
Okay.
Well, even though a commission platform means you pay by the transaction, you're not making a lot of transaction.
Yeah.
Assets under management, that's probably more sophisticated investor, and you're like, oh no, I want you to be adjusting and changing things more often, and that's why an advisor is paid in that model, because there's a little bit more hands-on approach.
Okay.
So that was my vague way of answering it, because everyone's different.
Yes.
But those are the two models you're looking out for.
Okay.
The question asks, are you commission? Are you assets under management? Then from there, what if it's commission? Well, what is the transaction per investment?
Okay.
If it's assets under management, well, what is that percentage?
Okay. And this might be a stupid question, so I apologize, but
Probably not. Like, a lot of people don't know this. I'm trying to keep it very simple yet generic, but to give people places to start.
Yeah.
But know that it's different.
So there are two models: so commission or assets under management.
Yeah.
For either of those payments, do I have to pay out of pocket, or does that money like come out of
The account.
The account.
And that's almost always an option for you.
Okay,
Yeah.
cool. So it's like
And
I
you can
don't have to find that money somewhere else.
Right.
I can just, okay,
That's almost always an option for you. So
Cool.
You can, again, generically. So I have 10. Again, I'll do 10,000 that I want to invest on assets. You can leave a little bit of cash for that to come out of the account. On the commission, usually when they initially invest, they hold back a little to cover it. So
Okay.
usually, or you could write check for both. So usually you can decide.
Okay. Very cool. So we've maybe touched on this a little bit, but when should I have an advisor? Like, when should I make that choice?
We touched on a little bit of sense of how are you ready.
Yeah.
But the point of when, because just because you have those things, you might still say, I still think I can do it on my own.
Yeah.
So in that place, I think it's when you want to know someone's constantly watching it, because this is my job.
Yeah.
You know, so you might say, I just want that reassurance of someone else looking at it all the time. And I would also say when you want to see if there's anything you're missing.
Okay.
I relate that to, we all probably could check our oil, and some people do, and bless your heart, do you? But I don't want to.
Nope.
Anyway, and when I do, I like that they're going to say, oh, and your brake pads might need this and that kind of thing. And there might be some people who are thinking like, because they're trying to charge you more. Well, if you go to a good place, just like a good advisor, it's always just like, because I'm seeing down the road and I know those type of things. So we talked about the environment, but mindset, I would say if you want to start ensuring that there's something you're missing, and if you just also don't want to take the time.
Yeah. I mean, I'm just speaking personally. I mean, hearing you talk about you're a mathematics major, and so you think about all these numbers, like numbers are not my strong suit at all. So like in my head, yeah, why wouldn't I want a trusted professional? Like, why would I want to be out here guessing? Like, I'm with you on the oil change. Like, they're wonderful professionals that know, like, that's their life's work, and I'm going to trust them to do that. So that listens to me. Okay. So how would I find, like, what would you recommend if I'm looking for an advisor? How do I find one? You talked about, a good place to go. Like, is there research we can do? Like,
Yeah. I think like anything else. So I've grown my business a lot by referral.
okay,
Actually,
yep.
yeah. So I think like anything else, I think look at those people in your life who you admire, who they are financially, or you think, oh, I think you have it all together, and ask them. I've also built relationships on LinkedIn. You can look on LinkedIn and different things. Notice I'm not just saying Google, because I think we've all seen like with Google you can like pay and advertise and get
the top result.
yeah. And so because of that, even if you do decide to Google, that's why hopefully you have a nice foundation of questions to ask and things. I hope that was a good
Is there like
a phone book? No.
yeah,
it's a kind
of like for businesses and stuff that you want to go work for. There's things like Glassdoor where you can go like check reviews and stuff. Is there anything like that for FAs?
Yeah. So not for FAs, because I think it would be even bigger. And so I mentioned that I'm a CFP, certified financial planner.
Okay.
That is an extra designation. That's an extra level of expertise and study that I've done in the field. And so because that's a smaller list, there is a database. You can go to cfpboard.com and you can narrow down, say, I want a CFP.
Okay.
Regionally, you can go by fees. Regionally, I want by what they charge also. And I know all that because you if you want to be included in that search, you fill out a profile and you kind of say, I like working with these people in these areas and I charge this much. So the CFP board has that database. I will say why I mentioned the designations and all that is you're leaving out there are other people that do this for current CFP. It's kind of like nurse versus nurse practitioner and that kind of thing, and that so I do not want to discount anyone who but because it's less people, it's a narrow down.
Okay. Very cool. We've got a couple more questions left. I know we've got a couple people watching with us, so I just want to remind you that if you have any specific questions or general questions about investing for Kristin, please, you are welcome to put those in the chat, and we will answer those. But otherwise, we'll head into the last couple questions. So we've been talking about these pre and post tax vehicles. I know we took a small detour about advisors, but when should I or when do I start an IRA or Roth or traditional? How do I,
I get two major catalysts for those. I usually get the catalyst for an IRA, traditional IRA pre-tax, if someone switched jobs.
Okay.
So they've switched jobs, they have a 401k, and they don't want to leave it, quote unquote. So the most common options besides leaving it are then do you combine it with your new 401k? If that's allowable. Every plan's different. They might not allow it. Your new employer might not have a retirement plan. That usually is the impetus for people to start an IRA. The impetus I get for a Roth IRA is when people get to that point where they have extra discretionary money to start it. So I think those would be the thresholds, and which you should do. Again, that's another reason why I would connect to the account or someone expertise, because there are all these actual rules around it.
Yeah,
I have had people come to me because they knew it was time, but they were savvy enough to start Roths, and then I had to say like, oh, you actually shouldn't have done that because of some of the income rules around it, and so we have to like correct various things.
I think we ran into that with someone I know had a Roth, but married filing separately.
Ooh,
and so
that's
you
a tricky
can't have a Roth when you
it's very hard to.
So just the point of that being there are so many nuances and so many rules that again can absolutely see the value of having an advisor.
So there's so many rules, and so I think a common thing is, again, you're at that place, I want to sophisticate my plan, and I know I want a Roth. That alone would be a reason to say, so I'm going to connect with an advisor on doing this to make sure that I'm doing it in the right way.
Awesome. All right, and then the last question I have is, okay, so we've built up this IRA or a Roth IRA,
Yeah.
how and when can I or do I take money out?
Yeah. I'm going to back up and say I want all these other thresholds because I prefer that you save them for retirement.
Yes.
They both do, and any potential FAs who are listening to this, they both do have various loopholes on getting to them.
Yeah.
It's a loophole for a reason. It's very complicated. It is not easy. I do not prefer that you take money from there.
Yep.
So everything I'm talking about is what happens when you're in retirement,
Okay.
or essentially you're past the age of 59 and a half. You might not retire until you're 70, but it's after age 59 and a half that we're talking.
Okay.
So now you're to that point, you want to take money out, and a lot of times clients will get to their bank account, and you can just take it out as you see fit. So on the Roth, you what you see is what you get, which is really nice when you get to that point. So you can take that money out for trips or monthly. It can pay you income. Kind of, that works for people who are used to a paycheck.
Yes.
And like that discipline. The IRA you can do as well if you're used to that paycheck. I want to add though, an IRA. Remember, you never pay tax on it. So the IRS has this wonky thing where they really want you to give them their money. And and this rule keeps changing. At this point in time, it's age 73 where you are required to take money out. It is set to go up to age 75 very soon. So for us, if nothing ever changes, it'll be age 75.
Okay.
They keep pushing it out, and at that time, it's what's called a required minimum distribution. Why am I getting into this right now for the average investor? Because I bet there's people on here listening who have parents near that age.
Yes.
And what and what I have seen is they are maybe getting some notices. They know that's something they need to do, but they're like, "What does this mean?" Maybe especially they haven't needed to touch it yet.
Yeah.
They're like, "Why would I
take this out?
Why would I do and I don't want to pay tax on it."
Yeah.
So that would be another reason. Again, if you have successfully made it that far and doing things on your own, to connect with an advisor, because there's strategies to reduce that tax hit and be strategic with that.
Okay.
Yeah.
And this is 59 and a half is minimum
IRS,
age.
IRS age.
First of all, that's also very random, 59 and a half
Specifically.
Does that number
change
as well?
No,
Okay.
and I haven't changed it for a long time.
Okay.
I don't know why it's out there.
Interesting. I was like,
The reason why I also think it's funny it's out there because I say to people now, like, if you retire 59 and a half, and it's like, but I'm not telling you that's when you retire. Some people hear that and they're like, I don't want to wait that long.
Yeah.
Some people hear that and they're like, I'm gonna be working way past that. And it's like, no. It's not really about when you retire. It's just so the IRS has the penalty rule.
Has their rules.
Yeah.
Okay. Awesome. I'll give one last call for any questions from the audience. But Kristin, is there anything that I didn't think to ask that I missed? Any last words of wisdom you'd like to impart? Not to put you on the spot, but any last thing?
When I say no, because I do have something. I just think, again, like I said, barrier to entry. I just really think that if anything that anyone heard piqued their interest, like, please reach out for you to learn more. And it's like any other good fit, back with the car, the gym, the doctor. If you meet with someone and it wasn't a great experience, I'm sorry for that, but don't let that cloud your entire experience of getting help. I think is my biggest thing.
I like that.
And when we're starting to get into I want my money to work for me. What does that work for me mean? That means investing. It means getting that return. If you're in that mindset at all, like, go talk to someone.
Yeah, we say that all the time. And I love that you said that. We made a similar point, I think last week on one of our social posts about realtors. One of my colleagues here worked with a realtor, and she and her husband ended up wishing that they had basically fired her because she didn't have their best interest in heart. So it sounds like you're encouraging people the same. Like, if you don't vibe, if you don't click, if there's just something off, like, you are well within your rights to move on and find someone else that fits you better.
Right. Exactly.
That makes sense.
It's so personal, and so you need to be comfortable.
Yeah. Awesome. Well, I don't see any questions in the chat, but this video will live on our Facebook page indefinitely. It'll be pinned to the top. This will also end up on our YouTube for people to go back and consistently reference. So I just want to thank Kristin so much. I already learned a lot. So if nobody else got anything, at least I feel good. At least thank you again, Kristin. And I know we usually do every other week, but this week we have a fun back-to-back Facebook Live. So actually tomorrow I will be joined by one of our clients who has seen some great success. She's going to come in and talk to us about what her financial coaching journey has looked like and how it has helped change her life. So I hope that we will see you guys again then. Thank you so much.
Thank you.